Good morning. You are watching live Daily Market Outlook for Thursday, 9th of May 2013, prepared by Windsor Brokers. Quick summary of the overnight session. We had a quite quiet session in most of the markets, except, of course, the antipodians, Aussie and the Kiwi dollar, that were boosted by upbeat Australian jobs data that came well above expectations and pushed the Aussie dollar against US dollar above the initial barriers at 102 and 102.20, now opening a way for some possible stronger recovery. Stellar labor reports in both countries prompted markets to pare back the risk of June rate cut in Australia, while reinforcing the outlook for steady to higher rates in the New Zealand. As said, Australian dollar gained approximately 0.6% since the day's opening, hitting a high at 102.40, and its recovery is from 2 months low at 101.54. That was hit twice this week, and attempting to build a base at this level, with many speculators being short and being forced basically after holding short positions to buy back the Aussie dollar. The other currencies, Euro slides at the beginning of European session after having finding support at approximately 131.50. Now we are slightly below this level, but still enough room for a stronger pullback to keep the immediate positive tone. The British pound steadies around the 155.30 zone, where the pullback from yesterday's trip to 155.90 found support. Dollar yen remains in the descending mode. Fresh low was seen yesterday at 98.57. As said, Aussie dollar is now in the positive path after data boosted the price above 102 and 102.20 barriers. Commodities are mixed. The crude oil reverses of the overnight high at 96.69, currently at 96.4, still in the consolidated range of recent peak at 97, with the downside being so far protected at approximately 94.90 levels, still keeping more focus on the upside. From the side, gold is having difficulties to resume its recent rally that commenced from 2 days ago, low at 14.41, as upside stays capped so far at 14.76. We're going to more elaborate on these technicals in our technical part. There are quite few interesting situations to see. Now we're going to take a look at the today's calendar that is quite busy, and again promises a lot of action during Thursday's trading. As said, Australian jobs data came, employment change in April came at 50.1 thousand, well above the expectation at 11.5 thousand, and the negative 36.1 thousand seen in the month of March. Unemployment rate at 5.5%. Chinese inflation came a bit higher than expected than the previous, and high above the previous release. 2.4 was overnight release for April CPI year on year, compared to 2.3 forecast and the 2.1 of March release. Producer price index came at minus 2.6, lower than expectation of minus 2.2, and lower than the previous release at minus 1.9%. Japanese indicators, leading indicators for March, came along with the previous release, 97.6%, and slightly below 97.7% forecasted level. Still to come, manufacturing production from UK, 0.4% is the forecast for March, below the February's 0.8%. Industrial production at the same time, 8:30 GMT, forecasted at 0.3%, significantly lower from 1% increase in the month of February. From UK also we have the key release today. Bank of England rate decision, as well as official, asset purchase facility. Both indicators are expected to stay unchanged. The rate at 0.5% and the quantitative easing at 375 billion. We're going to see in case of any unexpected reaction. That is so far not that likely. Another significant release is U.S. weekly jobless claims due at 12:30 GMT. Increase to 333,000 during the past week is seen on the forecast compared to drop to 324 of the previous week. GDP estimate from UK due at 1400 GMT. We don't have the forecast. 0.1% was the previous release of month of March, and the wholesale inventories from US due at 1400 at the same time. 0.3% is the forecast compared to minus 0.3% in month of February, and that's all from the day sessions late in the evening. Current account from Japan due at 2350 GMT is showing to is forecasted at 0.48 trillion yen compared to unchanged zero. I think this is a wrong one. Release. In any case, we're going to take a look now at technicals, as most of you are expecting to see what we can expect in today's movements of the major currencies and commodities. So we start, as always, with the euro. Let me just put the screen on. Okay, you can see it now. Hourly structure is still positive, though the indicators are in reversing mode after hitting overbought territory on yesterday's peak at 131.93. Still enough room for corrective easing that will not be harmful for the short-term netter bulls that were established on the yesterday's rally from that peak at 131.93. The pair failed to regain initial 132.00 psychological barrier, and of course the next 132.41 that marks the recent top. This is the peak of 1st of May 2013. And the person lost reduced gains and the dipped as low as 130.32. However, quick recovery now brings focus again towards the upper boundaries with 193 seen yesterday's rally. Now the 4-hour indicators are well positioned at this point and they keep still upside. With initial pullback being initially contained at 131.50 zone, approximately close to 38.2%. Much retracement of the rally from 131.93 and also being by 20 days. Now fresh action over threats and next strong support at 131.30, 5% retreat. Previous high of 7th of May and reinforced by 55 days exponential moving average currently at 131.28. Now descending hourly indicators see potential for further easing down. I would say break below 131.17. That marks 61.8% retracement, and with definitely a sideline near-term bulls and the risk slide below psychological 130.00. That will again make price range with a significant result from the recent rallies, as euro-dollars near-term price action is still holding with the daily chart. And the downside being protected on the range low at 1.933, as well as 100 days moving average at 129.78. Daily structure is still positive, though some loss of bullish momentum is evident, but bullish tone is still firmly in play and still keeps the upside more favored. Break of inside at this point is required to define the fresh direction for the single currency against the US dollar. British pound was steady this morning after pullback from this high at 155.90, just at 156. Levels was so far held at 140. This is also 38% of the from 154.45 low of 7th of May at 155.90. The support is also reinforced by 55 day upon 20 days moving average contained with the bulks of 2055 moving averages. Coinciding with the 50% retracement at approximately 155.20, so far underpinning the action. As we can see at the beginning of the day, the price started ascending higher. That also we can get on the chart that are moving at this point. Now the 4-hour indicators are still weak and they keep the situation as both as are now struggling to break above the with regain of yesterday's high and the recent top at 156.00, and of course possible break higher required to improve the 4-hour structure and open way for possible further gains and the resumption of the larger rally commenced at from 148.30 low of 12th of March. The structure on the daily chart remains positive with indicators heading north, and the overall actually spotted by a trend line drawn of 148.30 through 150.52, and finally the 151.95, currently standing at 153.36. Back to the lower time frames, as I said, the positive structure is still seen on the 1-hour chart, and any easing below 155.20, 155.00 is required to revive bears and confirm the top, another top at 155.90. Dollar yen is still in the descending mode of recent peaks and the upside rejection at 99.44 from peak at 99.44 seen on the 6th of May, so reached 98.57. This was the low of yesterday, marking up exactly 38 or approximately 38 points rally from 97 base to 97 exactly. From 97 to 99.44. The near-term studies are at the back foot, still with downside so far being protected, but the price holds below three moving averages on hourly chart 10, 20, and 55, and the indicators are below the line that keeps the downside vulnerable, as big below the recent low at 97, and close to this 38.2% retracement at 98.53 would allow a deeper reversal and further retracement. We will be looking for test of 50% retracement that stands at 98.25, and that will signal the end of the correction and shift the focus higher. Currently, on the 4-hour chart, 55 days moving average currently at 98.60, still holding dips, while break here and the more significant 50% at 98.25 would shift focus again towards the downside and keep the upside targets on hold. For now, we are talking about 98.44, 98.87, and psychological 100 yen barrier. Again, for our indicators are still in the positive territory, though losing momentum, and all indicators are heading south. That increases, of course, the downside risk. The downside risk for further easing that will be avoided in case of initial resistance at 99.00 will be regained. However, more workout upside there towards 99.34 and 99.44 and break above these levels would provide relief, and again 10 focus towards our initial targets at close to 100 yen. And for the Asian session was seen after of very positive and unexpectedly positive jobs data. As we can see, the base is now being established at 1014, and this is also a formation of a double bottom. Of course, the more work on the upside requires a full confirmation of the initial steps have been done as the price broke above decent strong support, and the base we had this double bottom, as well as 102 and 120, 102 more significant one, and we possible further recovery with the 61.8% being retraced so far on a rally to 102.53. This is the overnight's high. Overbought conditions on 1-hour chart suggesting that corrective action should take part, and the previous strong resistances now acting as good supports are here to contain the dips in order to keep the freshly established bullish structure. We're talking about 1.200, where we also bullish at 20-55 days exponential moving averages crossover. Any slide below 102 would again bring bears back in play, and the risk retest of 101.54 near-term base and possible extension down towards 101.14 multi-month range floor posted in March 2013. The 4-hour chart indicators are well in the negative territory, and the current rally is just seen as a brief correction with 5 days exponential moving average so far capping the advance, and again of trend line break of trend line, bear trend line of the recent peak of 11th of April at 105, continuing at 102.90, as well as 103.00 as psychological resistance. Break here is required to ease the immediate bear pressure with clearance of next significant barrier at 103.21. Low of 3rd of May, 10 base at 154, and allow for a stronger recovery where significant target stands at 103.8. This is the high 1st of May 2013, and basically break up this level is to come the boost. It is also close to 50% of the entire 581 to 101.54%, and below 103, I would say we'll keep the downside risk in play, and as a part of the larger downtrend from 105.81 so far from that 101.54, but the fragile situation still keeps more downside risk in play. From the commodities, let's see quickly the crude oil. It's in the consolidative mode on the hourly chart, with the data being reflected so far at 94.85, and the upside rejection on seen overnight at 96.74, as well as yesterday's high, allows for some stronger corrective action. As long as we hold up 94.85 and 95.00, more focus will be still seen towards the upside. According to the 4-hour situation is again positive. The movement seen as maintaining the advance for it. Break up this weekend of our next target at 97.60. The daily chart is interesting that maybe that's what limits the upside at 96.69. These are the yesterday and today's highs, and the clear break here is required to open next target at 97.68, with the indicators being well positioned and holding in the positive territory for break higher and the extension towards 97.68, and the possible extension up towards 98.63. Another significant resistance, and the peak of 13th of February 2013. More interesting is gold at this point. I was asked this morning to make something more in depth about gold. We're going to take a look at this now. Let's start the hourly chart. That is still holding positive conditions. Still see potential for a fresh attack higher. The gains were so far capped at 14.76. We're talking about from 14.41 low of 2 days ago, where the previous low at 14.40 contains the reversal pattern, and the formation of a double bottom is seen at this point. Regain of 76 previous range tops at 14.79, of course, clears at 14.87 in order to resume the advance. 4-hour structure is still holding, I would say, neutral tone, still showing no direction. And the break of either side would give us a correction for the yellow metal. However, a negative tone, despite the indicators heading north, still holding in the negative territory on the daily chart, sees the situation more fragile and more downside risk. As long as we hold below initial 1487, I do apologize, barrier, and another significant levels, psychological 1500 and 1526, that marks 76.4% retracement of the down leg from 1590 to 1321, as well as this also marks the strong support now acting as a multi-area range floor that is currently at 1522. Break up to provide the relief and allow for a stronger corrective action. For now, 1487 is the main focus at the upside. Interim resistance is at 1482, while on the loss of very significant and strong support, as well as break point at 1440, 1438 previous high, would risk further easing and confirm the level of 1487. Now we have about Dow Jones, silver, euro, yen. So let's go one by one. Silver, continue with the charts. Silver remains pressured on the larger picture. Daily studies hold the negative tone. Current bounce of 22, low of 16th of April is seen rather as consolidation than any significant correction, following a strong fall from beginning of April peak at 28.07 down to 22.00, with the consolidative action being limited under important 25 barrier. On lower frames, again, the range trading is clearly seen on the 4-hour chart, with the lower boundary of the range standing at 23 20 upside one is 2483, just at 25, a level that marks 50% retracement of the down leg from 2807 to 2200, and basically break above this level is required to provide relief and give us fresh direction and basically the open way for a stronger recovery. Otherwise, immediate risk will be seen on a loss of 2324, the next layer of support at 25, 260 ahead of our level at 2200. That 4-hour structure is neutral, while some more positive tone is still seen on the hourly chart as recent top leg from 2343 low today is the upside target at 2443. This is the high of 6th of May 2013. As long as we hold above dynamic support, which is approximately at 24 levels, break below here would again be more bearish. Dow Jones is well supported, and as I saw this morning briefly on the charts, a break of psychological 15,000 barrier now sees potential for extension higher the levels, and we have ones at, let me just find my ticks. Dow Jones, we have them prepared so far, just ahead of level at 15,095. This is also near the psychological 15,100. Then we have 15,155, which is Fibonacci projection, and 15,205, another projected level. More focus is still seen towards the overextended conditions on the 4-hour chart, and sign of reversing of the order suggests that corrective action may take place during today's with initial support standing at 14,952. This is the high of 3rd of May, also close to 23.6% retracement of the rally from 14,393 to 15,09088 rally, and then comes the 38.2% retracement at 14,823, close to the previous previous high at 14,822. Basically break above this level, which seems to be quite for the Dow Jones, as this would signal a major pullback and corrective action. Now on the daily, as we see on the break above congestion top that was at 14,822, and the regain of 1,500 now opens way for a further extension higher. Again, we are approaching overbought territory that may trigger a pause in the current trading in favor of some corrective action, but overall picture is still bullish, and there's still upside in focus. And the last was euro yesterday from somebody. The hourly structure is still, the correction has been since the beginning of May at 130.39. That was tested yesterday, 130.40. With the more focus, according to the hourly structure, still seen to the upside. However, a break of the 130.40 range top is required to resume recovery, and the open way for next significant barriers. We have 130.65. This is the high of 22nd of April. Barrier is 11th of April high. 4-hour structure is showing a more positive tone, though lacking even for some more significant action, as that keeps the 130.40 so far upping the upside. Break here is required to only what we mentioned, 135 and 131.11, while break below strong support at 128.95. This is low of 8th of May would bring bears back in play and confirm the near-term, I would say, triple top at 130.40. That will be bearish signal for possible further easing. Is there any other question, please? It seems that was all for today. In that case, I would like to thank you all for being. Keep an eye on today's calendar, as it's quite busy, and we have a number of releases. As we already witnessed, quite unexpected, the Australian data brought us some stronger action in the markets. Of course, we have the Bank of England release, as well as US weekly jobless claims and a number of other indicators. So keep an eye on the today's calendar, and of course we expect to see you again tomorrow morning at the same time, 7 o'clock GMT 10 o'clock local Cyprus time. I wish you a nice Thursday, and as always, good luck in your trading and a lot of profits.